Hey everyone, thanks for joining me for today's video, and I hope you guys all had a very happy new year and holiday. In today's video, I'm going to be talking about 4 strategic priorities that I have for my stock portfolio in 2024. So we're going to go through each of those. Hopefully you guys can think about those as well and look at your portfolios for the year ahead and what you're really trying to receive and what outcomes you're really trying to drive within your portfolios for this year. But before that, we're just going to do a very quick check on how the portfolio did in 2023. As I get this up, if you guys don't mind giving this video a big thumbs up, it helps a ton with the channel. So you can see the Canadian side of my portfolio didn't have a tremendous year. It was only up about 2%. And honestly, going into the last couple weeks of the year, I was about flat on my Canadian portfolio. It really just jumped up in December there. That was primarily just because I have lots of utility stocks in here. I have some telecom stocks like Rogers in here, and those really got pushed down throughout the year with interest rates being pesky and persistent at higher levels. Where I had some really strong gains this year was more on the US side. I have about 80,000 US dollars here in my US portfolio. And you can see here up 25% on the year. So while it was a smaller part of the portfolio, it gained 16,000 US dollars, which was pretty much responsible for my entire gains. And I just had a handful of big tech companies in here like Google, Meta, Microsoft. I also had some good luck on some of my other positions like Visa. S&P Global was one that I bought that did really well. So in this year, it was the US tech and fintech stocks that really propelled my portfolio. We'll see next year what happens now that we're in 2024. If it's more of the same, or if some of the laggards really do overperform now that we're in the new year and interest rates may be coming down this year. We'll see how it all goes. But this video is primarily to talk about 2024 and some things that I'm trying to do in my portfolio throughout 2024. So the first really big thing I'm going to be focused on this year is trying to invest more in some of my positions here that have proven history of growing dividends versus maybe a higher upfront yield. As you saw at the beginning, this portfolio combined now is about $260,000, and this is a non-registered account. So I do have to pay taxes on this portfolio, and it's getting to the point that that tax bill isn't too high because I've been also investing in my RSP to offset some of these dividends, but I don't really want to have an increasing compounded burden on my head year over year to a great degree from stocks paying 7, 8, 9, 10% dividend yields. So in this portfolio specifically, I'm going to be focusing a lot more on dividend growth stocks and maybe leaving the extremely high yielders to my TFSA, to my RSP. For any of those in the US or non-Canadians listing, those are registered accounts that have either tax-free dividends or deferred tax payments, until retirement. So as I go through and I look at what are some of those kinds of companies that would make sense for me to add in this portfolio, not necessarily naming ones I'm specifically interested in at current valuations, but stocks like CN Rail that have dividend history of growing double digits each year. Fortis, which grows 5 or 6% each year. Continuing to go down here, the banks like TD, CIBC, even Scotiabank, despite them having trouble some years and them going through a bit of a rough patch, long term, they've been increasing their dividends as well. So those are kind of some of the stocks, to name a few on the Canadian side. On the US side, it's going to be those dividend kings, those stocks like Coca-Cola, even 3% starting yield, but really good track record of growth. In addition to that, stocks like Visa, S&P Global, despite going up, I wish they weren't up as much, but they have great track records of very high dividend growth. And they also buy back shares as well. So I don't have to pay dividends on that capital return from the company if it's just making me a larger owner with the shares that I already own, not necessarily a realized gain. So that's really the first thing that I'm focused on in this account, primarily because it is a non-registered account, and over 10, 20, 30 years, that may be a more effective way to compound the earnings power and the moats of these companies, and just a more sustainable way to continue to add to this portfolio without increasing that tax burden after I'm done contributing to my RSP over the next few years. So that's really the first thing on my list that I'm focusing on this year. Doesn't mean I won't invest in any high dividend stocks in this account or add to them depending on valuation, but I'll definitely have a higher bar in terms of what needs to be true in doing so. The second thing that I'm going to be focusing on in 2024, and this was one for 2023 as well, but I want to continue to globalize my portfolio a bit more. As we look through this portfolio, and you saw off the bat, the majority of it is in Canadian stocks. As I look across my entire holdings in all of my accounts, I pretty much have about 50% of my holdings and the earnings power of all the companies I own in Canadian companies invested in the Canadian market, probably about 30% in the US, and those are those blue chip stocks and tech stocks for the most part, like Google, Coca-Cola, McDonald's, P&G, etc. And then only 20% outside of North America. So if you were to look at the global economy, it's not 80% in North America. And even the split between the US and Canada, Canada is obviously not 2 times the size of the US. So being a Canadian, I've come to terms that I'll obviously be over-indexed and overdeveloped within the Canadian market, but I'd love to not be as overdeveloped as I am today. So trying to increase that US exposure a bit, because some of these US companies, like P&G, I'll name one here, even though they have a really big US business, they also operate in China, Europe, all these other markets. So these US stocks do get me pretty good exposure globally as well. Same with a company like Visa, that is technically a US company, but they're accepted and operate pretty much all over the world. So these are some of the stocks that really do help me diversify from a geographical landscape. There's also some great ETFs like VXUS here. This one is great for diversification for me, even though it may not be the best performer long term, but it pretty much gives me the entire global stock market excluding the US. So that gives me lots of exposure to markets like China in a very small and indirect way, Europe, Pacific regions, Latin America, even a couple percent in the Middle East and stuff like that. That's really hard to get a hold of. So those are some of the investments that I may be more willing to pour additional funds into throughout the year. One that may be good for people looking for Canadian listed opportunities to diversify their portfolio a bit more is ZDI. This one does have a management fee of about 0.4, 0.5%, but they pay about a 4% starting dividend yield here, 4.2%, and they own blue chip dividend paying stocks in Europe, Japan, and I think Australia too, but mostly Europe, Germany, Spain, France, etc. So this is one that I've owned for a couple years here, get a nice monthly dividend yield from it, and the stocks that they hold on an underlying basis are really big companies that you've probably heard of. Think Nestle, think Unilever, LVMH, those companies that do still operate in North America, but their primary businesses are in Europe or in Asia and stuff like that. So that's a good one that you don't really have to deal with foreign exchange or dealing with US dollars in driving some diversification in your portfolio. Which moves me on to the third one. The third one I'm focused on in 2023 in terms of this portfolio is starting to streamline a bit more. I currently have, I think, 32 positions across all my portfolios, and then I probably have, give or take, another 10 ETFs. So I'm kind of looking at potentially getting down, hopefully under 30 stocks by the end of the year. And I don't even mind if lots of that money or lots of the additional money throughout the year go into ETFs, because they do kind of provide really nice diversification. But I feel like that's the role those ETFs play, and having individual names are more driven by companies I think will outperform by a wide margin in the long run for whatever reason, whether that be competitive advantage, moat, valuation at current level, mispricing. So I think I'd rather concentrate those bets a bit more than having as many as I do, and maybe leaving the diversification up to those ETFs that I trust to do that role and that job in my portfolio. So I'm looking at stocks that I may not have huge positions in, which I don't really want to build out further, but don't really move the needle for me. So one here is Jameson Wellness. I'm up about 26% on this one. Started buying in the mid-20s, added a bit in the low 20s. We're now over 30. So this one's probably trading around high teens multiple, was buying it in the mid-teens, and it's one that I don't think it's overpriced, but I'm not necessarily excited to dump a bunch more money into this one. And overall, I only have about $4,000 in it, which in the grand scheme of my portfolio, even just my Wealthsimple portfolio, is under 2%. So this is one that I may just take my profits, take one name out of my holdings, and one less thing I have to worry about. Keep it on my watch list in case it goes down to a degree that I'd be willing to put $10,000, $20,000 into it, but not necessarily have it cluttering my portfolio, and take that money and invest it in a higher conviction bet that I am really excited about the growth of the valuation potentially, or in an ETF where I could just at least achieve that diversification. So those are some of the things that I'm going to be looking at kind of dwindling down in my portfolio throughout the year. May go up a stock or two, down 2 or 3, but hopefully by the end of the year, I'm at under 30 stocks in my overall holdings here. And then the last thing that I want to continue to make sure I have in 2024 is a very high cash position throughout the year. You can see here, I currently have 2 cash ETFs. One of them, ticker cash, has about $20,000 in it. The second one is ticker PSA, and I believe that one has about 10. So overall, this portfolio is about 12-13% cash. I really like having over 10% cash. It's been easy to hold cash over the last handful of months, especially with the market trending up how it has, and these ETFs paying 5% dividend yields annually on a monthly basis. You get a nice little check every month for just holding your cash in a very low risk manner. So it's been really easy to hold this much cash, over 10%, throughout 2023, especially the last few months. But in 2024, as interest rates go down, I still want to hold a good little safety cash position on the sidelines, just in case something dire happens, just in case I really want to double down. And that doesn't mean a stock goes down 5%, 6%, 10%. That means if there's something very big, 20% dip for whatever reason, I just have enough ammo on the sidelines to act fast, to capitalize on that opportunity. And that is one thing that I know it's probably going to be tougher to hold on to, because those monthly high interest payments will likely go down throughout the year, but I really want to hold on to a 10% plus cash position throughout the entirety of 2024, obviously barring something extreme where it makes a lot of sense to dip into it. But it's going to be something I'm going to be very strict with myself on throughout the year. So there you have it. Those are 4 kind of investment priorities and strategies that I'm going to try to deliver in my portfolio in 2024. Overall, 2024 did have pretty good gains for me, most notably on the US side, as we talked about. So hopefully, 2023. So hopefully 2024 is equally as good. Maybe we'll share the love a bit, and the Canadian stocks will drive it home for me this year. But thank you guys for listening. Let me know in the comments what you're planning on doing with your portfolios in 2024 and what your highlights were in 2023. If you made it to the end of the video, be sure to give this video a big thumbs up. And if you haven't yet, please consider subscribing to the channel. Thanks again, and I'll see you guys in the next one.